All right, good afternoon, everyone. What's going on? What's going on? All right. Got some earnings reports coming out. Let's do our disclosure. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is roughly the same. I'm not in this WISA. I hit out right before we started the meeting. Not in this. Not in this. Not in this. Everything else is pretty much the same. Where's that thing now that I hit out? Yeah, still holding. All right. So let's jump in. So I don't know. It felt like a bloodbath today, but the SPYs here are only down 0.6%. We managed to turn green real briefly at about 2:30 there on that pop that came in, which the market then faded very hard. So SPYs down 0.6%. Feels like more. What's the RSP at? RSP is only 0.2%. That's interesting. I would not have guessed that. The Qs are down 1.2%. The IWM is down a full percentage point and closed on absolute dead lows of $193. What's going on with everything else? TLT lows of $193. Closed up. So you would think that with this TLT move today, TLT closed on highs. You wouldn't think the IWM would close on lows, the TLT closing on highs. I guess XLE got whacked a little bit. Not even that bad. Down 0.4%. What about KRE? KRE was green. Wow. This IWM, not good. Yeah, so TLT provided a little bit of relief. The dollar provided a little bit of relief, but the market just did not care about any of this stuff. It's so funny how markets work. How you can hit certain points in the market where you just get forced selling, and you might look at interest rates today and say, hey, this is supportive of a bounce, and look at the dollar and say, hey, this is supportive of a bounce, and look at the market itself and say, hey, there's been a pretty big sell-off in a relatively short period of time. There's some extension. The market certainly has the ability to bounce, and then the market just sells all day because, well, we're in a feedback cycle now. We're in a feedback cycle of selling leading to more selling. The VIX, where our VIX close? The VIX is remaining elevated, not a close above 19 or 20, but still a close above 18. The VIX is remaining elevated, and this market looks terrible. We lost 503, which is the major support level that I've been talking about since the end of February. So big deal that we lost that. This morning we kind of really outlined, and I guess we did it in yesterday's afternoon meeting as well, outlined a few possibilities. It seemed like yesterday at the close and the way that we kind of held 503 throughout the day yesterday, that the market was at just a really important juncture of regaining control for bulls. If we could get above yesterday's high today, potentially begin a snapback into target one on a snapback. Really the only target is like that 508 to 512 area, depending on how aggressive the bounce is. And then from there, either we clear 515 or we're back on full bull mode, or create a lower high and work our way down. That was two of the scenarios that we discussed. The third scenario that we discussed was that we just break 503, and that the break of 503 creates momentum to the downside, and if that happens, you better watch out and get the heck out of the way. And that is what happened. It was that third scenario. That third scenario, we discussed it. I'll be honest, it's not really what I was expecting, though I recognize that it was certainly a possibility, so that's why we had to discuss it. I was kind of expecting more of holding in a little bit more, bouncing a little bit better, bulls trying to support this 503 area a little bit and not just giving in so easily. And that's not what happened. Then the market just continued lower, got destroyed. We had a little bit of a gap up this morning. We almost were able to really get above yesterday's high. I thought if we got above that 506 to 506.50 area, the high of the day is 506.22, right in the beginning of the day with the gap. I thought if we really could have cleared yesterday's high, that actually would have been the signal to continue up. But real quickly here, by the 10 a.m. candle, you knew that that was shot. This was your first negative Maribozu penalty stick candle from the SPYs. Once that came in, the market's guilty until it proves itself innocent, and you kind of just have to get out of the way a little bit. You can try, some little bounce trades here or there. I think that this was an okay bounce trade back through 500. I didn't hate the idea of trying to buy like this inside 5 and up to see if it could negate this negative Maribozu, though that obviously failed as well. Just the market just lost that 503 and said, watch out below, and that's the environment that we're in right now. Q's similar situation, never able to clear yesterday's high. The gap up was faded even faster for the Qs off the weakness from the semiconductors, which was led by this ASML earnings report, which was not good. But Nvidia gap and crap today. AMD super weak right off the open, continued down all day. So yeah, I mean, look at that AMD daily candle today, almost back down to $150. It's a heck of a move from this peak here, which seemed like we didn't belong up there. So this is a heck of a move now to the downside. I mean, I don't know what to say. This is how markets work. Markets work in feedback cycles. We've been talking about this for the last couple months, that if the market starts to break certain downside support levels, that we could quickly go into an environment where selling leads to more selling, and that's where we're at. This IWM candle here is gross. A lot of extension here again. We got like $5.50 of extension from the IWM. Not extreme, but notable. But the Russell at this point, yeah, closed at 193. That was the spot we were paying attention to for a bounce yesterday, which worked. But this market is, it's not looking good. So right now, I would certainly say sellers are in control. It depends a little bit on which sector and which stocks you're looking at, but sellers are in control. I think that the market of stocks is worse than the stock market right now. You can see that when you look at the IWM versus the SPYs and the Qs, which have still been able to hold up a little bit from some of those mega cap tech companies. But we flipped the switch. I don't know what else to say about it. We flipped the switch when the VIX started really breaking up. In some ways, we flipped the switch. I remember when we had this VIX false breakdown of this channel below 1350, and then it got back into that area, and it's been, a really strong VIX and higher market-wide volatility pretty much ever since then. And the market is continuing to correct. So at this point, you should expect that bounces are to be sold into until and unless we reach extreme levels of extension, which would be like $10 plus of extension in the SPYs and Qs away from the 80 MA on the daily chart, and until we sell enough to wash the market out, which, it's hard to say what that's going to be. 10% correction from highs, I think, seems very reasonable. The scary part is that next CTA trigger, I think, is at, 4880 is what we last saw, which we're still a ways away from. So if we trigger that, then we're probably, working towards a 10% correction. So that'd be like the next major spot that I would watch. You do have this gap fill for some potential support here back from February 21st. But outside of that, I think we're now going into an environment where it's about percentage retracement rules of the uptrend that lasted from the beginning of October until the end of March, and overall percentage pullback in statistic rules, which is something I love paying attention to into pullbacks. Obviously, market corrections can become bear markets can become depressions. I am not calling for a depression. I am not calling for a bear market. I'm just saying, I do like to look back when, let's say, when you get that 10% pullback in the market. I love looking at the statistics of, how often do you get a 10% pullback in the market, aka a market correction, and when you get that, how often from there does it lead to historically an actual bear market versus how often does it lead to a bigger bounce from there, and what are the unique circumstances that are governing this market correction that we are in at this moment. But we're not even there yet. We're not even there yet. Yeah, I'm seeing Bill here out of the corner of my eye. We're not even there yet. It is pretty controlled and orderly selling. We're not near any type of capitulatory event. I don't see anything looking like that at all on the market. It's just deleveraging, and it's trends that are being sold out because that uptrend is now gone. It's that first CTA trigger hit. It's vol universe selling with the VIX being higher and staying higher, and just this feedback cycle of, well, my stop loss is here and your stop loss is there, and my stop loss just is making the market go down, which is working towards your stop loss, and then your stop loss is making the market go down, which makes this market work towards the next person's stop loss from people who have been long into the sub move. And then at a very certain point, maybe we can start paying attention to, extreme sentiment and positioning buy signals, but we're nowhere near that. We're nowhere near that. So one step at a time. Market does not look good. We've lost all the major support levels now that I've been looking at. And I would just pay attention to larger amounts of downside extension, which could be shorter term buying opportunities. Pay attention to larger amounts of downside extension. Bill here saying, I wouldn't be surprised to start reading that systematic strategies have come off of record exposure. Yeah, that's what I wouldn't be surprised to see there. I think that there's a pretty fast exodus on that. And I think it was Bill, you posted the Goldman article earlier that shows that CTA is in the sell environment on every single market move basically this week, and we're also in the buyback blackout window for most companies because we're at this very early age of earnings season. So you don't have the companies themselves on the bids right now, which have always been a massive amount of support. And we're probably much closer as well to flipping from that positive gamma, which had been reduced dramatically, to negative gamma, which also is an extra piece of information or layer of probability that selling can feed into itself. So that's pretty much where we're at. I don't want to sound like a doom and gloom end of the world bear, but I mean, look, guys, we had just an incredible rally. Actually, I'm just moving my medium here. There we go. We had an incredible rally. I mean, it was just here at the end of October that we announced, Max Long caught this entire move. It was coming into more mid-February that we got more cautious. Though, what do we know about trends? Trends can last for much longer than you expect that they do. This one from there lasted for another month and a half. And it started with this penalty box candle here on April 4th, which we took notice of. Big failure candle here, failure to make a new high, failure to retrace through that, and now we've switched into a small time frame pattern of lower highs and lower lows. So that's just the facts of the matter. It's funny that my better trading in some ways has been in some of these more crazier, low floaty stocks the last couple of days because I don't typically love trading them. Like WISA was the one yesterday. Is this thing running now? Because I'm going to be really upset. Oh, that hurts. That hurts. I hit out of a decent sized position into like $9 because I was like, it's not going. I got to do this afternoon meeting, and that sucks. Whatever. Part of the game. Man, they ripped this thing from here. That's a lot of P&L difference. But anyway, traded some of this today. Did really well with it yesterday. EDBL off the open was kind of the one today. They faded this thing very heavy into the close. They gave back a little bit of P&L in the afternoon on this thing, but it was a great opening trade on that. I mean, that's kind of some of the stuff I've been trading. I traded VNDA today. I made a few bucks in it, even though it didn't really do too much. As far as continuation, This is a potential all-cash buyout at $7.25 plus. I haven't read too much on the details of it. I probably won't go back to it tomorrow. But that's kind of been where it's at. You know, continuing just to watch the brutal sell-off in some of these growth stocks. Look at this Coursera that I used to trade a lot of this Coursera. I've been out of it pretty much the entire year. When I got up to $20, kind of hit my target, and I decided I didn't love the direction that the company was going in, so stayed away from it. But would not have guessed that this thing would pull back from over 20 to 12 over the course of this year when the market has done this. So some of these more long duration stocks that we were talking about in the morning meeting, looking for some oversold bounces, are just brutal. It's AI today. I mean, do you even call that an oversold bounce? It's not that great. But obviously the market was weak and the IWM closed on lows. And there were a couple that were okay. They faded Shop in the afternoon too. Shop was really strong in the morning, and then they faded that down. So yeah, be careful on your counter trend trading. Don't be too early on the long side of the market. We'll pay attention to when we get extreme downside extension, and we'll look at those levels. And otherwise, we kind of have to take it as it comes, because this market seems very technically broken at this point. That's pretty much all I got. I'm happy to answer any questions that you guys have. First from Cody. I noticed the IWM 200 SMA is at. I noticed the IWM 200. You're saying 182.75. I got 189.50. Are you looking at the 200 EMA maybe? I got 189.50. Are you looking at? So I'm not sure. We need to confirm this 200 day. Either you or I are wrong. I'm seeing 189.50 as the 200 SMA, which we're still a ways away from. There's a bunch of support down here in the IWM. Into 190, there looks like a big support zone. Actually, there's a little bit even above that. There you're talking about 182.50, 190, 187.50 are big support levels from this year. 187.50 being the low of the year. So those would be the spots that I would pay attention to. Oh, on the weekly, got you. Oh, interesting. It's interesting that the weekly 200 is higher than the daily 200. Oh, interesting. It's interesting that the weekly 200 is 192.75, and like we just pointed out, there is some support at 192.50. Spot we could pay attention to, but I don't think that moving averages are support. I never have thought that. They're just squiggly lines. Sometimes they can kind of be self-fulfilling prophecies where buyers will come in at those spots or sell below them because they think that they're important, but definitely you'll see some pierces through on moving averages, and I think that the slope of the moving average matters more. And these things are just tools to guide price action, to help you understand price action, and are not necessarily actionable in themselves, right? We spent a lot of time talking about how I utilize the 8 and 21 EMA as a tool to help me understand price action. Never as support or resistance, never as a place to put a stop loss, never as a place to put a bid or an offer. With the larger time frames, I like to look at 20, 50, and 200 SMAs. And really what I care more about than anything is the slope of those moving averages. If the slope is moving higher, then you know the essence of trend for that time frame is higher. If the slope is sideways, you know that the essence of trend is neutral. If the slope is lower, then you know that the essence of trend is down. And you have time frame or trend continuity. If you have a rising 20 SMA, your small time frame, above a rising 50 SMA, your intermediate time frame, above rising 200 SMA, being your larger time frame. So that's kind of how I like to utilize those moving averages. I don't think that SMA versus EMA necessarily matters very much. It's just how you utilize the tool itself and kind of how you learn to read it. Because again, these are not just blind support resistance levels that you want to buy or sell off of. It's a slope that matters, and it's it's the reference point also. You know, like it's worth paying attention to. I feel like that was in July. Last July with the market. I'm trying to remember when all those articles were coming out. Maybe it was even later than that. Where's July? Maybe it was July. I remember seeing all those articles that I'm assuming it was late July in that peak of 2023 before that market correction occurred. That all those articles were coming out about how there was a historic distance between the market price action and the 200-day. That's the type of information I like to pay attention to. I find that information to be meaningful. That, you know, statistically we are in the 99th percentile of where the market has traded versus the 200-day in history, which doesn't mean that you can't go higher. It's just an extra piece of information. It's an extra layer of probability, if you will, on kind of where the market is and how stretched it is, and to be maybe a little bit more cautious on continuation at that point. So I think that kind of answered your question there a little bit, Vikas. Popping over to the YouTube. Do you think that the IWM and XBI are good RDR plays for tomorrow, given the TLT bounce and the oil dollar sell-off? It's hard to say. So I would have thought that they would have bounced more today, the IWM and the XBI, for the exact same reasons that you're talking about. So why didn't they? Well, because, again, when you hit an environment, when you hit certain market thresholds that force selling, it doesn't matter that there are other... Doesn't in the exact same way that we were all scratching our heads when this market was holding up like an absolute champion at certain points in March, and ignoring what the TLT was doing, ignoring what interest rates were doing, ignoring all the other types of concerns, to the point where I was like, wow, you know, some of this stuff is starting to really build up here and is looking a little bit concerning, but the market just won't break. You can have the exact same thing occurring in the opposite fashion, because on a day like today, in the same way up there was so much forced buying, I feel like on a day like today there was a lot of forced selling. So that forced selling is forced selling, and it doesn't care that interest rates and the dollar are being a little bit more supportive of the market right now. So do I think that tomorrow is a good opportunity to, you know, buy these things back up as an RDR? Maybe. I like your thought process of only wanting to buy it on the way up. And I think that that's really the key here. You're not trying to say, when we close on lows pretty much today, and this market is breaking and breaking down, it doesn't make any sense to have an exercise that says, okay, you know, right now we're at $500.60, and the absolute low is going to be $497. So let's make sure to buy $497 tomorrow, because that's going to be the absolute low. That's just, there's no way we can look at this chart right now and know what the absolute low or when the absolute low will occur of this market pullback. It could be tomorrow. It could be a week from now. It could be at $498. It could be at $480. There's no way to know that. But we, in the moment, can find these periods of time that set us up to actually be able to capture that low when it comes in, even if we don't know when it will happen or where it will happen. And what you're describing is the right way to do it. What you're describing is, hey, if I see that, you know, we have these supporting factors and my trade setup is there and I'm able to buy this market, not catching a falling knife on the way down, but I'm able to buy this thing on the way up versus a low of the day versus a pivot point versus something like that, and know that I have a good risk reward for a snapback to the 80 MA on the daily, and then we can take it from there. Though I agree with you, those are the types of trades that we want to take. So yeah, it could be a good trade tomorrow. Make sure you're buying it on the way up, because there's a good chance that tomorrow's not going to be the low either. Appreciate the question, Gabriel. From Joy, could the SPY EMA 100 be the next area of sports? I think I kind of just went over that probably before you answered the question. I've never looked at an EMA 100 personally. It's not a moving average I look at. I don't even look at an SMA 100. Moving averages are not support. They're squiggly lines. They're tools. So I don't think so. From JB, you've mentioned gamma a few times. Can you explain that? I can give a quick broad overview. So in the market, the market is composed of market makers and dealers who are required as part of their job to come in on the other side of trades. It probably especially happens in the options market, and that's probably the best way to describe it. Where especially if a big player is buying a call option, let's just say, who is the one that's selling them that call option? Well, it could be another market participant who's a fund or a retail trader or whatever, but more than likely it's some sort of market maker that is coming in on the other side of that trade and is selling them that call. Well, market makers inherently are not trying to make money by taking a risk on the market. They're trying to make money by making money on spreads. So what they want to do is, as soon as they see that they are short that call, they want to be immediately coming in and, let's say, buying equity in order to hedge themselves out. So that's kind of the motivation of those market makers. And the way that gamma works in the environment is when you are in a positive gamma environment, which we've been in for pretty much the entire calendar year, unless we flipped today or yesterday. We've been in a positive gamma environment the entire year. That's going to have a much more insulated move on the market, because what happens is when the market moves down, those market makers and dealers who want to maintain a hedged position, they have to be adjusting their position, meaning buying or selling, based on the new market move. So in a positive gamma environment, you're in an environment that's insulated, meaning into down moves, those dealers are going to be basically forced buyers in order to stay hedged, and into up moves, they're going to be forced sellers in order to be hedged. When gamma flips and goes negative, the opposite actually occurs. When you're in a negative gamma environment, those same market makers, in order to stay hedged, they actually have to sell as the market moves down and buy as the market moves up. So it's an important data point to pay attention to when you are understanding market structure and market environment, and how the market has the potential to move. So when you go and more times than not, we're in a positive gamma environment. When you actually flip into that negative environment, then your kind of range of outcomes increases. You have potential of getting much larger moves day to day, which for us, has impact on short-term trading. It has impact on what your risk might look like on the trades that you're taking. It certainly has impact on the reward profile of the trades that you're taking. Generally, if you're on the right side of a trade that's moving with the market, you are going to have a higher probability of success of getting a bigger move. Generally, if you're in a negative gamma environment, you especially want to be focused on trend continuation trades, I would say. And when you're in a positive gamma environment, then you're going to have a much higher probability of those intraday reversals or intraday ranges or intraday support, and then you adjust to those strategies for that environment. So I hope that helps, JB. For Mike and YouTube, I went long the IWM on the 955 candle. So I hope that helps, JB. For Mike and YouTube, I went long the IWM on the 955 candle. Woof. I got it though. ADMA was catching up. Just had a bull flag here building out for almost a half hour. I got it though. This is where you would want to see the market continue. Not quite an inside 5, but I executed as such. This is where you would it's more of a bull flag, I think, or a bull consolidation. That's your trade execution there than forging an inside bar. Once that failed, I figured longs. Once that failed, I figured longs are shot unless extension comes, and I struggle to mentally flip and look for short setups. Yeah. So first of all, I think just knowing to get out of the way is like a great job. That's one of the things that I'm better at. Also, I'm better at recognizing, hey, I just need to get out of the way, than I am actually flipping as well. It's difficult to do that, I think, to be, no one's a perfect trader. It's difficult to be that mentally flexible, where you could be looking at this market in the first 30 minutes and say, wow, we're setting up to be above yesterday's high, we're setting up to get that, bounce in the market, so I want to be looking long. It's a great job to recognize when the 10 a.m. candle comes that you got to get the heck out of the way. As you're saying, longs are shot. Totally agree with it. It's an entirely different animal to then recognize that you should be flipping and focusing on the short side. It's difficult to have that mental flexibility, and I don't really know anyone that's perfect at it, to be honest. We all kind of get, to some degree, I think, stuck in that mentality of naturally being more bullish or naturally being more bearish. And yeah, I think that covers it. So I appreciate the questions and comments there, Mike. It sounds pretty on point. I think you did a good job. Yeah, I think that covers it. So I appreciate the questions and comments there, Mike. It sounds pretty on point. I think you did a good job. I use EMA for short-term 821 and SMA for longer-term like the 200. Yeah, okay. Yes, EMAs are computed in such a way where it takes more recent prices into higher effect, basically, in its calculations. It could intentionally close the IW on lows to deceive people. I don't know. I wouldn't get into that much of a conspiracy theory about it. I don't think it's necessarily about deceiving people, but I do think that at some points, I do think that what you might be perceiving as deceiving people is more just how markets can work, where if they close the market on lows and then you get a big gap up, that could give you a gap to go to the upside, especially if there's positive news or something like that that can feed on itself, because now shorts are trapped, because it would make sense to go home short overnight tonight. Because we closed on lows, so shorts are trapped and new longs can't get in, and that can make the market move quickly the other way. So I think it's more about that than actually deceiving people. I think that we closed on lows because the market broke support today, traded like crap all day, and we were just weak into the close. I think that's really what it comes down to. We're kind of broken right now. From David L. Can you share a little bit more? Can you share a little bit about how to manage risk on a trade like Snap today off the high volume? Sure. Are you waiting for a series of certain candles or volume indicators to lock in a trade to the upside, or are you getting are you getting immediately with a pretty far stop loss? Any tips on ways to better manage risk on a high alert trade like that? Sure. So this is a news move. This is a news move. That's what Snap is. So you want to recognize. Somehow Siri thinks I'm talking to Siri, but I'm talking to Snap. So you want to recognize. So this is a news move, right? Characterized by high volume and everything that's going on. So I think the real right way to trade a news move initially is to be long versus the opening low of that news move. So, we called very quickly that volume was coming into Snap. We didn't quite as quickly actually get the news on this one as we usually do. I think we were trying to figure it out, but then we saw it was once again related to TikTok. When I saw Snap moving, the very first thing I immediately did was type up pins and type up Meta, because I figured if it was a TikTok headline, it wouldn't just independently be moving Snap. It'd be moving both. And pins was upticking like a little bit at that point by the time when I typed it up. Meta wasn't moving at all. So I was like, probably not a TikTok headline. Turns out it was. So really, you want to try to see and understand what that news is quickly. And you want to try to, as best you can, interpret the importance of that news. And then if you think that it's important, it's just a matter of where can you buy stock versus that opening low, and is it worth it to take that amount of risk? If you knew, I'm just going to say, hypothetically, a really important Snap headline just hits, and the low of this bar is $10.51, and right now it's trading at $10.70, and you don't know what it's going to do next. Okay, I can get in for 20 cents risk off this great, really important headline. Okay, I'm in. Now you're late. Another 5 minutes. 5 minutes goes by. Another 3 minutes goes by. You were getting lunch. You're in the bathroom. You stepped away from the computer, whatever it was. You come back. You look at it. You see the headline. You know that now that headline is 12 minutes old. Your price that you could buy is $11.20. The stop loss is to be $10.50. Is it worth it to buy it? The answer still might be yes, but probably not. If it's like extremely important news, then yeah, maybe, but probably not. It's probably not worth the risk reward when when the news has already been out for 12 minutes. So really on these news moves, I like using the opening bar of that news, because if this ever gets violated, then you know that the news actually didn't matter. And if this ever gets violated, you know that every single person that just bought on the news is out of the money, and that means that you want to manage your risk and get the heck out of the way. So that's the initial trade that I like to be able to have. And if you miss that trade, then it's about finding a new technical setup for continuation. If you miss this trade too early, or by the time you're looking at it, you're deeming it as not a good risk reward versus this low, then don't do anything. Don't be involved. At a certain point, you might even be able to take the opposite side of the trade if it gets really extended and the RSI gets really high and everything else. But otherwise, if you want the long, you need to be patient, actually wait for a new trade setup to come in. Some sort of pivot low, hammer continuation, inside and up in equilibrium, something like that, that you could then take advantage of. Now you have a little bit of a different trade. Now what you're looking for at that point, though, is you're looking for that news event to be the catalyst that leads to trend. Initially, you're taking advantage of momentum. Now the pivot's coming in, and you're looking for that to be a catalyst that takes advantage of trend. And now you can have a new higher stop, long off the pivot, or long off the inside bar low, or whatever it is. So that's what I like to do there, David. I hope that helps. From Acosta, does gamma persist over days? Yeah, typically, yeah. It's dynamically evolving from day to day. You can get updates from different data resources that are out there on kind of approximations on what the gamma number is on a day-to-day basis. I don't think we always get it on a day-to-day basis, but we, at least as a team here, through Pat's note and through the research that we're able to get, we have a general idea of kind of where the environment is. For example, I think it was just Bill in the VTF either yesterday or the day before yesterday provided us data that into the down move, gamma had been reduced from $7 billion positive, which is like, I think, a very statistically high number, to $1 billion, which is much lower, but was obviously quickly on the decline. If the market declined further, there's usually like a trigger point for the SPX, which also is an evolving point, where if you can trigger that price, that's the spot in which it flips. But then, it's not just flipping that necessarily matters, though it has an effect. It's also what the dollar number is behind it. How extreme of an environment are we actually in? So I hope that helps. Yep. From David back on Snap. After 11, it definitely felt late. I wanted to wait for a pullback for a small trade, but I'm always hesitant to get in early on. No problem. No problem. All right, gang. Well, it's 10 of 5. It looks like I got through everything here, so let's call it. Have a wonderful night, everyone. I'll see you all tomorrow. 5. It looks like I got through everything here, so let's call it. Have a wonderful night, everyone. I'll see you all tomorrow.